Hello, everyone, and welcome to the Harvard FCU Winter Town Hall. We're excited to be here with you today and to have a little lunchtime chat about Harvard FCU and what's been going on at the credit union and more broadly. And you'll hear from our CEO and president. So just letting you know that this is webinar format. So participants on the call, we cannot see you, we cannot hear you. So go ahead, eat your lunch, do whatever you want to do. You can participate in the webinar, however, by asking questions live. We did collect questions ahead of time and we're gonna respond to those. But if you have a question that comes up for you during the presentation, please use the Q&A feature. So it's not the chat, it's the Q&A feature of Zoom. You just can put your questions in there and we will get to hopefully all of your questions, have them all answered. This presentation is being recorded and we will send out the recording and post it on our YouTube as we always do. So you will have that access to that as well. And now it's my pleasure to introduce our CEO and president, Craig Leonard. Craig recently celebrated 15 years with the credit union and excited to hand it over to you, Craig.
Yeah, thanks so much, Jen. Really appreciate that. Yeah, 15 years went by just like so fast. So I hate to say that I've been doing this for more than 30 years, but yeah, 15 years here at Harvard. So we can just touch real quickly upon kind of the financial situation at the credit union in 2024. And we've talked about this in past town halls. Was more challenging. The last couple of years have been challenging, largely because of the interest rate climate more than anything else. We've seen some corrections towards that, towards the second half of 2024, when the Federal Reserve started to implement some reductions in short-term interest rates. We are forecasting for improved financial conditions here in 2025. I think overall, from a balance sheet perspective, the elevation in interest rates are still there, particularly around mortgages. So we certainly have seen certainly less applications when you combine higher interest rates with a lack of overall housing inventory. That becomes challenging for everybody. So that I don't think that's going to go away anytime soon, unfortunately. And then on the deposit side of things, interest rates are still pretty elevated. So there's good yields for savers in particular. If you're interested in CDs, I think there's some really interesting terms out there that I would encourage people to take a look at. So we do think 2025, like I said, will be better for the institution than that of 2024.
And I definitely am personally taking advantage of both the Smart Reward Savings and the CD specials because they are great rates and definitely a benefit of membership. All right, we have some questions that we received ahead of time from the membership, but I'll just reiterate for folks who might have come on late. If you have any questions that you want answered that you did not submit ahead of time, just go ahead and drop them into the Q&A and we'll get to them as we're able. So our first question, Craig, is Harvard FCU running any CD specials? I know you just mentioned that. And how do they compare to the market?
Yeah, so we still are, a lot of institutions continue to run CD specials, and this started happening a couple years ago. Overall, in the entire financial industry, there was just kind of a drain in liquidity starting kind of back in 2023 or so. And so a lot of institutions started offering CD specials. We still offer it. I would encourage members to take a look at our website. We have 4 different specials going on right now, ranging anywhere from 6 months out to 15 months. Our rates are very competitive in the marketplace. We look at the market on a weekly basis to see what other institutions are doing. I think one thing that really separates us from a lot of other institutions these days is that many institutions have positioned themselves from a CD special standpoint in making their specials very short in duration. So you typically see the best rates in a 6-month term or a 9-month term. And they're doing that for a particular reason, in which there's this assumption that the Federal Reserve is going to continue to decrease rates. Probably not as much as initially thought, but right now the market still thinks the Fed may decrease rates, 1 or 2 times this year. And by other banks positioning their CDs or trying to incentivize their customer base to go short, it allows them to kind of reprice their CDs faster. Your CD will come up for renewal that much quicker. And if rates go down, it affords them to give you a lower term quicker. What we've done is we've extended some of the duration of our CDs, and we're seeing a lot of members in particular take advantage of that. The most popular term that we have right now is our 15-month CD. It's aggressively priced. It allows you to kind of go out a little bit, but not that far in overall kind of length. And it kind of secures your return for a longer period of time so that if the Fed does come down on rates, you've locked in that longer term. Now, there's different ways that you can kind of strategize around that. You can kind of think, all right, I'm going to go for a 15-month term. And then there's the other mindset to say, well, what if they don't decrease rates? Or what if I need my money very short term? You can do what's called a barbell kind of strategy where you put some in a 6-month category, some in a 15-month category, and you're kind of hedging your bets both ways.
Mm,
But we're still active with CD specials. We're still aggressive in our rates. And I think if you look at our rates compared to certainly any of the national banks, like a Bank of America, Citizens in our marketplace, Santander, you'll see that our rates in particular really exceed theirs.
great. Thank you, Craig. Yeah, I know for me, I did the CD because I knew I had some home repairs coming up, but I, didn't need access to that money in the short term. So it really made sense.
And the other thing too, Jen, this who knows what's going to happen with the stock market? There might be some volatility. So if you want to take a little bit more of a risk adverse position, and
Mhm.
CDs is a perfect opportunity to do so.
Yep. Yep. So this next question, I'm guessing, is from a longtime member. Thank you for being a member, because they're asking how much expansion into traditional banking is the credit union contemplating, and will we soon look like all the other banks?
Yeah, I mean, what we've been trying to do over the last few years is we've certainly added to the different products and services available to members. If you think over the last 3 years or so, we've added investment services, we've added insurance. You can do um, digital estates and wills now through the credit union. And we're just kind of in the infancy of rolling out business banking. And so when you think of what we do from a product and service standpoint, we look a lot more like, I would say, a traditional bank. Um, and a lot of what we have rolled out over the last few years comes from town hall meetings just like this, and where we get feedback from our membership. And, we survey our membership, and our membership has been asking us to kind of introduce these types of different products and services. So we want to ensure that we're competitive. I think the one thing that makes us dramatically different, however, than some of the other banks, and the big banks in particular, is that you'll continue to get um, what I'd like to believe, excellent personalized service. You'll
Mhm.
continue to get better rates and lower fees. And I think the other thing that you'll get is transparency with our organization. I don't think that a lot of other large institutions or even small to mid-sized institution are doing things that we are kind of even doing just today, in that we're providing regular updates to our members. Um, you have complete accessibility to me. I provide my email on every one of these forums, and so I'll do that now, so that if you want to reach out to me and let me know how your experience is going with our institution and what we can do better, it would be fantastic. Our emails have changed a little bit, so it's now cleonard@harvardfcu.org. Um, and you tell me what's on your mind. And I also would love to hear if you're having a great experience with us. Tell me that too.
Yeah. Thank you, Craig. I know for myself and a lot of the people I've talked to, there's just really a value in that member-owned, locally controlled feeling for your financial institution. Like I really value that, and I think a lot of our members do as well.
And we're here, we our sole purpose is to serve our membership,
Hmm.
and so we want to make sure that we're listening well to our membership and responding.
Yep. Yep. Okay. A little bit more of a technical question. Will the credit union be joining the Fed Now or the RTP system, real-time payment system?
Yeah, and so what's happening for a lot of members who may not understand what's going on is there's been a real push within the Federal Reserve in particular about moving towards kind of instant payments. You think about what's still in circulation today. Just I'll take an example of a check. You get a check, you deposit, and there's a time lag in between of when you deposit and when you get credited, or when you give a check to somebody else and it's deducted from your account.
Mm.
Um, the industry and the government is moving towards kind of more real-time instant payments. And this has been in the works for years. We are just working with our technology partners around the implementation of a project like this. Truthfully, we're probably a year out, and I think most institutions are still probably a year out in terms of implementation or an effective date. But we definitely have it on our radar screen like so many other institutions.
Great. Okay, thank you. You mentioned that we now have investment services, and for people who don't know, we have the investment advisor Raj Bonchali. If you look at our YouTube, that which Ty already put into the chat, there's a couple different webinars that we've done with Raj. So if you want to kind of see his style, so we do have a question: is there a cost to the investment advice offered by the credit union?
Absolutely no. No, to sit with our advisor, absolutely free. We encourage our members to take advantage of our investment advisor, Raj. He's fantastic. When we created our investment program, it was with the intent that it could serve the entire membership, from those who were just starting out, novice investors, just to say, how do I even start?
Mhm.
We encourage you to make an appointment with Raj and develop a plan. And there's no charge to that whatsoever. If you already have an investment portfolio, you want us to take a second look at it just as a checkup, we're happy to do so. It's no charge. So, we really want you to continue along your financial journey. We want to make sure we're giving you the right tools to be successful.
Great, thank you. And then this one is also about investment, but it's about the credit union's investments. What are Harvard FCU's investment strategies for long-term sustainability?
Yeah, and I'll take this on kind of two different ways. I think if you look at what we do as a core business, I don't see that changing really dramatically into the future. In that we're predominantly a mortgage lender to people's homes. That's the largest asset that we have in our balance sheet. Besides that, the second largest asset are student loans. We have a great program with um, with Harvard. We do a lot of student lending here at Harvard, but not only with Harvard. If for anyone going to any type of higher education school, we can help you from that standpoint. Um, we're just starting to introduce, like I said, business lending or business banking into our suite or our product set. It'll be years before that actually kind of really alters kind of the makeup of our balance sheet. But when I look at this from a different lens in terms of being successful and sustainable long term, I think there's four things that we have to continue to focus on. Um, we have to first make sure that we're investing in our employees. I think that's key. We really believe that our employees, are our greatest asset. And you hear that from so many different organizations. We're backing that up. We want to continue to develop our employees, provide opportunities for them to grow within the institution, and give them the tools to kind of be successful. So that's one, is to investing in our team members. We want to continue to invest in technology. There's every part of our business we have some type of technology component to us. And we're looking at technologies in ways that we can not only be more operationally efficient, but that we can offer more an enhanced member experience for our membership. One thing when I took over this role as CEO, coming almost 5 years ago, um, I've always said that life is stressful. The way you bank with us shouldn't be. And so, how we can use and implement technologies into our infrastructure to reduce friction is really important to us as an organization. So we really want to use technology for ease of use. So I would say that's the second thing. We want to continue to invest in the different communities that we serve. We certainly are headquartered here in Cambridge. We invest back into the Cambridge market. And Jen, you do this all day long, right? In terms of community outreach,
Yep.
we partner with phenomenal nonprofit organizations, and so putting money back into the communities, making sure that they're safe and vibrant. That's part of our mission. That's part of why we're here. And I think the fourth thing for us to be successful long term is to listen. We need to listen to our members. We're not just going to create things that we think are good for a bottom line. In fact, we don't take a profit first mentality. We take a member value first philosophy. So listening to members, you doing things like these town halls and getting information back on how we can better serve members. If we can do those four things well, then I think we'll be a very successful organization. A lot of organizations will talk about those different elements. I think the key for us as an organization is how well we execute upon them.
Agreed. Thank you, Craig. Could you please state the credit union's position and/or commitment to inclusivity?
Yeah, there's certainly been a lot of talk around DEI. Certainly, with the new administration coming in, we have a strong commitment to DEI still, and that's not going away. We serve a very diverse membership, and we as an organization, and I personally believe that having an employee base that is representative of our membership makes all the sense in the world.
Mhm.
We have a robust DEI structure within the organization, and we feel that the differences unified make us a better organization all around. And so, we have a continued strong commitment to diversity, equity, inclusion, and belonging. And again, we just feel like that makes us a better organization.
Agreed. Thanks, Craig. So the next question is about the new administration. How do you think the policies of the new administration will impact both the credit union and its members?
Hard to say. It's still very, very early. I will tell you that we're monitoring this very closely. There has been a few things that impact us from a regulatory standpoint, and that the new administration, and this is not uncommon whatsoever when you have new administrations, they tend to put there's a new Republican chair for the NCUA, which is our chief regulator. They're the insurance company that insures your deposits. Our organization is different in that we have two types of insurance. So your deposits are insured in full, but primarily it's the NCUA that is our chief insurer and chief regulator. So they've made that change. There's the Trump administration so far, from an overall regulatory standpoint, has put kind of this um, um, demands out there. I guess I'll use demands as the word, or to say that for every one new regulation that comes on the books, they want to take 10 away. So there is definitely the mindset of deregulation.
Mhm.
Some of that may be of benefit to our members, but again, it's too early to know that. The other big difference that we've seen so far is with the CFPB, which is the Consumer Finance Protection Bureau. They've removed that director. As of right now, the Treasury Secretary is in charge of that on an interim basis until they have a permanent new director put in, and we'll see what comes out of that. I don't see a lot of new regulations coming in, but this is something that we're going to have to monitor closely.
Yeah, thank you. And in the meantime, if members have any concerns about their personal credit or debt situation with the flux with the Consumer Finance Protection Bureau, we always recommend our nonprofit partner, Green Path. And
Mhm.
I'm sure that Ty can drop into the chat the link for Green Path. You can get free financial counseling. Anyone on this call, please take advantage of free counseling around your credit, debt, budgeting, lots of their certified student loan counselors, as well as HUD certified counselors. So if you have a housing question, so just lots of good free service from our trusted nonprofit partner there for our members. And again, I think that that's just one of those benefits of being a member. And so, we had a question about overdraft fees. Will we be able to lower those?
We haven't talked about lowering our fees for overdrafts at this point, so it's not on our immediate radar. We do tend to be on the lower end of some of the fee structures, particularly when you compare ourselves to larger institutions. Um, there's been um, there's been different posturing around overdraft fees within the marketplace. We'll continue to evaluate. When we put forward fees, we try to look at a fee structure that is fair based
Right.
upon kind of the value that is being returned. And so when someone takes or incurs an overdraft, and sometimes it's there are mistakes, and we're happy and we understand mistakes happen, and we're always willing to kind of work with members and making sure we're doing the right thing by them. Um, but when an overdraft does occur, we're essentially we continue to pay the item, and so we're essentially giving an unsecured line of credit almost, if you will. And
Yeah.
so we do um, um, feel the fee that we're implementing or assessing right now largely covers our operating expenses to do what we do.
Thank you for that. Yeah, I guess it's really as member owners, we are trusting each other. And, that's the history of the roots of credit unions, right? Was like lending to one another. And so if you're overdrafting, that is an issue, right? So um, let's see, will we be adding more ATMs that members can use for free? I think you have good news on this.
Well, we don't, we're still a small credit union,
Mhm.
and we don't have a large branch structure, and we don't have a large existing ATM fleet. We're never going to have the same type of fleet like a Bank of America.
Right.
And so what we did is we understood that, and we understood that other vendors assess fees. And so we've designed our checking account products that allow for ATM refunds, and I'll have Ty put in our different checking accounts. And so if you have one of these checking accounts, they come and we'll refund your fee, your ATM fees. What we wanted to do when we created our checking account products was allow our members to go to any ATM that they wanted to and not worry about the fee, knowing that it could be refunded at the end of the month.
Hmm.
So you go to an ATM, there's a hypothetical $3 charge. You would pay it at that time of transaction at the end of the month. We add up all those ATM fees. Kind of we have various caps, but they're generous, and we refund those to you on a monthly basis. The
Nice.
other thing that we do is we partner with what's called the Sum Network. And if you go to our website under our locations, it'll list all the Sum ATMs around. And as a member of the Sum ATM network, we've agreed, and these other institutions have agreed, that those ATMs pass along those fees for free. And so there's two different ways in which you can approach this. Go to a Sum ATM, or really consider one of our checking accounts and get those ATM fees refunded on a monthly basis.
Great, thank you. Okay, we got a few questions that sort of we summarized, I think, in one question. Was my financial data compromised by the Department Office of Governmental? I'm sorry, I don't Doge. I'm just going to say
Yeah,
Doge this week. I'm sorry, I should have remembered what the acronym was, but
yeah, it's kind of crazy out there right now. I'm not gonna lie. This is my personal opinion. I feel that there has certainly been overreach, by what they're doing at Doge and moving into the Treasury Department, and I'm not entirely sure what they've done. And I think there's going to be a lot more information that comes out in terms of what access to information that they've had. I have viewed a few things in which the current Treasury Secretary downplayed kind of their access. But then even last night, the Department of Justice put in some type of order which restricted their access to um, future access into information. There's a lot of congressional leaders that are outraged, and I know that here's an opportunity for us as citizens to really make our voice heard, and a lot of people are doing that. As an example, I shared this with our staff last night. Um, Alaska, which is not anywhere near us, but as an example, the senator from Alaska typically receives 40 calls per minute into her office. Over the last week, since this became publicized, that those 40 calls per minute are now 1,600 calls per minute. And I've heard that from various states. So there has been a flood of people voicing their opinions in terms of
mhm,
how upset they are around this. And rightfully so. We have a right to have our information um, kept confidential and kept private. There's federal laws around that. So it is disturbing if, in fact, some of the news articles come out to be accurate in terms of access to information. So I would say, be mindful of that. We're going to continue to monitor the situation as we learn anything new. If we feel there's any concerns that we feel our membership should be aware of, we will communicate that right away to everyone.
thank you. I appreciate that. This is kind of a follow-up to that. Given recent Treasury data security concerns, what steps should I take to secure my account? I know I decided recently I hadn't yet enabled two-factor authentication. I was like, don't be lazy, Jen. This is really important. Preventing any kind of fraud is important. So I decided to do that. What other steps do you think members should take to
Yeah,
secure?
I think that's a good idea. One thing that people unfortunately don't do enough of is they just don't look at their accounts.
Mhm.
And so I think it's really good um, behavior, and you should be doing this regardless of what's transpired recently.
Yeah.
Um, but go through your account. Look, make sure that the transactions that are hitting your account are yours. Fraud besides this has been rampant for years. So be mindful and make sure that you're looking at your account. There's other things you can do. If you're nervous, you could put a credit freeze on your account, which just says, hey, no other lender could open a loan in my name because I have frozen credit. Now, if you go and you want to apply for credit, you need to take that freeze off. But
Right.
that's something that you could do if you're concerned about, is my information out there and could someone do something nefarious with it? The other thing that we're doing, and I'll talk about this again under kind of new initiatives. We're rolling out a new product over the next couple of weeks, which is called Savvy Money, and it'll have your credit um, information there. What we do today, or what we have for the last few years, is we've provided people through online banking their FICO score on a quarterly basis. This is a much more robust tool which updates their credit score on a much more regular basis. You can see more of your credit report in there. And so if you started to see anything odd, you would have that information that much faster. So there's a
Mhm.
few things that you can do to just kind of be mindful of your account.
Great. And I know that we have information on our blog about how to put in a credit freeze. Green Path also has great information on that, the nonprofit that I mentioned before. So if you want to do that, it's always actually good policy, I would say, to have a credit freeze on your account. Um, and then the another similar question, what safeguards does the credit union have in place to protect my money in the event that the federal banking infrastructure is dismantled?
I would first say that there's no evidence at all at this point that there's anything wrong with the banking infrastructure industry. There's nothing um, that I've heard at all in terms of having that be compromised. And so there is a lot of scary information out on different social media platforms. And I think we have to be mindful that there's a lot of actors out there trying to just provide bad information, and so I don't want people to be afraid of the banking system. You shouldn't be. It's very safe. It's very sound. We have ample capital at our institution. We get examined regularly. Your deposits, like I said, are insured in full. That's another thing that is somewhat unique about our credit union. When you compare us versus other banking institutions, both nationally and locally. Um, we have both primary insurance through the NCUA, but then we have secondary insurance. So most institutions will insure you up to $250,000. We insure your deposits in full regardless of amount. Okay,
Mm,
and that's something very different about our institution, something we're really proud and happy that we provide to our membership.
yeah,
This is again something that you know we'll keep looking at, but I haven't heard anything, and I don't want people to feel like they need to come into the institution and put money, under the mattress or any of that thing. We're not there. We're
yeah,
not there, and I don't see anything on the horizon that would make us think that we're there.
yeah. Great. Okay. We have a few live questions that came in. One is, how competitive are your home mortgage rates?
We price our products and our rates daily, and so the mortgage rates are as competitive as every other institution in the marketplace. We're not priced significantly below others right now, and we're not priced higher than others either. We're kind of all right in the same neighborhood. So there's not a lot of um, change in price from one institution to the other at this time.
Mhm. Okay. Um, And then just a little follow-up question on the CD rates. This member has been screening rates with us and with another local bank that they bank with in Virginia and another credit union. And they found that our CD rate is 1% higher than those. They wonder how that's possible. Are these other banks too conservative or risk averse?
So they're saying that the other institutions, their rates are not as great as ours.
Yeah, like I think they're saying that our rates are 1% higher on the
Yeah.
CDs, getting more
In
value.
particular, yeah, if you go out to, our 11 and our 15 month in particular, you'll see a significant gap.
Mhm.
And it goes back to, again, what I had said, other institutions are lowering those rates such because they want their customer base to go short. They're
Mhm.
thinking about how to maximize profit.
Yeah.
We're thinking of how to maximize your value. We're not a profit-driven organization. We need profit to survive. Okay. It's not that we are a nonprofit, we are a not-for-profit organization.
Mhm.
Okay. And so we would love for you to have your funds with us. And so we feel that we're offering better value. And I think those other institutions could offer higher rates. They just choose not to because I really think they're trying to drive profitability over value.
Mhm. Okay. Um, few more questions about Doge and such. One is, how can I assess whether my HUECU, now known as Harvard Federal Credit Union, banking data have been accessed by Doge or the Treasury Department? What can I do to mediate risks? Is there any way to know if your banking data has been accessed?
No, there isn't. There's privacy rules that, and we get them all the time because it seems like everything gets compromised. You get them from so many different vendors to say, hey, your data may have been compromised. You can do this, you can do that. Um, There's nothing that I have received as the CEO of the credit union from the Treasury Department or any other type of governmental agency to say that our membership was compromised in any other way. Certainly, if we do get that, um, I have a commitment to our membership to let them know of that. And
Mhm.
so there's nothing right now. And again, um, I think we're trying to figure out what in fact has or has not been done by Doge yet. So you have my commitment that we'll continue to monitor this extremely closely.
Thank you. So when we know something, the members will know it as well, and we'll, try and give them advice about where to go
Yeah.
from there if there is any issue.
And again, I would encourage our members to um, to reach out to their U.S. representatives, reach out to their U.S. senators, let them know what they're telling us on this call. They're not happy and they're scared, and they shouldn't be. And so that's their responsibility as their representatives to
Agreed.
to take action. So I would also encourage them to you know to reach out to those individuals.
Okay. Thank you. A little bit similar question. What are the implications of discussion by the new administration about removing the FDIC?
Um, we're not sure what's going to happen. As Doge does its thing, one of the possibilities that could happen is consolidation between the two um, regulators, between the NCUA and the FDIC.
Mhm.
They could combine.
Yeah.
The NCUA or the credit union has a very strong lobbying group. 1 out of 3 Americans belong to a credit union. There's 144 million members of credit unions in the country. And we have a strong lobbying group. We feel that being an independent part of the government system, the NCUA being independent of that from the FDIC makes all the sense in the world. Credit unions operate very differently than banks do. And so our lobbying group will continue to make that effort. Um, but Doge and this administration is looking to gain efficiencies. So this is a fight that may or may not happen and something else that we're just going to have to monitor.
Thanks, Greg. Um, could you comment if the credit union has any investment positions in cryptocurrency instruments?
We don't, we have a very what's called vanilla investment portfolio, which means it's very risk adverse. Our investment portfolio is consists of U.S. Treasuries, U.S. agencies, and pretty much like brokered CDs. They're all guaranteed investments. There's no risk. There's no credit risk And we also take a relatively short position in our investment portfolio because we take a longer position in our loan portfolio. So there's not much market volatility as well.
Great, good to know. I think now we have, for the moment anyway, answered any questions. Feel free to drop them into the chat, into the Q&A if you have any. I wonder if you want to say anything more about upcoming initiatives at the credit union?
Yeah, first, great questions that we've got,
Yeah,
this time, and we always do. So, and if there's anything else that is on your mind, again, my email address was put into the chat or Q&A part. So, don't hesitate to reach out to me. A lot of members take me up on that offer, by the way.
yeah.
So,
I know
and
that.
yeah, it's great. I don't mind it. I wouldn't give it out if I didn't want you to have it. So, in terms of upcoming initiatives, I mentioned the Savvy Money. It's a great tool that will be coming out over the next couple weeks, within online banking. When you see it, check it out, sign up. I think you're gonna really love it. The other thing that we've been working on, which is this introduction of business banking products, we've started to roll out a business banking deposit suite towards the end of last year. We're working on introducing some small business lending types of products here in 2024. Now, I know that doesn't apply to everyone, certainly on this call or within our membership, but we think it's an important addition to our lineup. So those are I would say, the two big ones that we're focusing on certainly here in the first half of the year.
Great, great. Um, And then we did just want to mention to our members that we always have a sort of a bonus for making a referral to family, friends, folks that you think might like to join the credit union. Membership is now, there are pathways to membership for most people to join the credit union. So um, we definitely encourage you to, and certainly your family can just join as family members. Um, this month, though, we have an extra bonus. And do you want to talk about that a little bit, Craig?
Yeah, we think we have a great value proposition to our members and prospective members. We would love more people to join our organization, and we're trying to incentivize our members a little bit through our referral program. I think it's typically $50 is what
Yeah,
we do,
that's right.
right?
Yeah.
And so we've kind of doubled that amount. Really trying to encourage membership into the credit union. So here's a way that hopefully you love the credit union and you want to just refer somebody else, and you make a couple bucks in doing so, and they make a couple bucks in signing up.
Yeah.
And so we're really encouraging membership. There's a number of items that I talked about today that I think really separate us from other banking institutions, and so don't be shy to talk us up and make some money along the way.
Yeah, agreed. And in my role of community engagement, I do have to say that we also give $5 to charity every time a referral is made. We just made a gift of over $3,000 to the MSPCA for last year's charity program. This year, we will be collecting those $5 bonuses for Heading Home, which is a local homelessness and housing charity, and really proud to be able to support Heading Home because they're a great organization. Um, let's see. We have a question about who is eligible to join the credit union. Does my referral make someone eligible?
They do, so when we changed our charter last year, um, we have now what's kind of called a multiple common bond. So anyone who there's a path for membership. Uh, you know, uh, However you want to look at it. If you're part of the Harvard community, that's how our roots started. You're eligible for membership. When we changed our charter, there's also we were allowed some geographic opportunities. So if you live in a certain geographic area, you're eligible for membership through that way. And lastly, if you aren't part of Harvard, if you don't live in these particular communities, there's an association that we actually fund for you that allows you to have eligibility rights into our credit union. So really, if you want to be part of our organization, we have a way in which you can do so.
Great. Thank you. And I know that you already gave your email and we put that in the chat. We also have our wonderful support folks. We are now Harvard FCU on all the socials and websites. And yeah, I think it looks like we have in fact answered everybody's questions, Greg.
Great.
And thank you so much. It really is great to hear from someone as knowledgeable as yourself and just kind of get the lay of the land from you. So I know I appreciate it, and I know our members are commenting that in the chat too as well. So thank you.
Yeah, and thank you for all the members for your membership. You know,
Yeah, thank you for attending. Thank you for your membership.
yeah,
We certainly appreciate you always. And
absolutely.
yeah, thanks. All right. Have a good rest of your day, everybody.
Thank you, everyone.